Hi there, folks. Welcome to the program. This, of course, is Stinchfield, the podcast. Who out there has heard of a company called Blue Owl? I hadn't heard of this firm. I guess it's a private company that's lending a lot of money. Well, now it's got all kinds of problems, and the credit stocks start to fall. And it looks like the mainstream media is pushing this as we've got to be so concerned about this. This is going to be the next credit crisis that we've ever seen. And I'm going to tell you, something's fishy about this. I'm not sure I'm buying into it. So I've got my buddy Kip Herriage with me today. He's the CEO of VRAinsider.com. The place to go, by the way, for this morning newsletter, that if you're not signed up for this, you are missing the boat. I urge you, go to VRAinsider.com right now. You get a free 2-week trial, VRAinsider.com. And when you hear Kip, you're going to see why you're going to want to sign up for this newsletter. So let's talk about Blue Owl, and then we'll talk some gold, some silver, and the miners. Where are we headed with all of that as we head into, I believe, a great bull market, no matter what the mainstream media wants to tell us? So with that, folks, let's get the show started.
Uncensored and unapologetic. This is Stinchfield. Here's your host, Grant Stinchfield.
All right, welcome everybody. As promised, Kip Herriage is here, VRAinsider.com. Kip, it's great to have you on the program.
Grant, always great to be here. Thanks for having me back.
All right, so I was all set to talk about gold and silver. And then you said, hey, have you heard Blue Owl? It's making all kinds of news on Thursday. Stocks are down. Credit stocks are down. Tell me the scoop on this.
Yeah, it's again great to see you again. It's great to meet you, by the way, yesterday in Dallas. Great event there. Good to finally put a hand together on that when I met you there. Sorry about that. I had a text come in that I should have replied to before this started. I like what you said a minute ago about this being a big bull market, and it is. This news today on Blue Owl Capital has got the bears and the perma bears really all up in a frenzy. There are so many people that are living in the 2008, 2009 era, and they just believe the next crash is around the corner. We're going to have another housing crash. The markets are, we're going to have another global crash, and you're going to lose all your money. You're basically going to take your home. We're going back into that era again, and we're just not. It couldn't be anything further from the truth, and I've got really hard facts on that. But it's an important topic because so many people, and again, we have subscribers and clients all over the world. As bullish as we've been, and we've been the most bullish advisors in America from the bear market bottom of October 13th, 2022. We called the bottom on that day. We forecast this is going to be a generational bull market. We've never backed away from that. We've been right. And we think this is just the beginning of it. But again, there's so many people that even of our clients that are afraid to get in the market because they can't forget 2008, 2009. It's a fresh wound. And look, we all get that. But here comes this Blue Owl Capital news. Again, as you said correctly, it's a private credit company. It's not even a public company. There are a lot of these funds out there now that manage money privately, and they do all kinds of debt swaps and originations, and they do real estate trusts and all of these kind of private things. Well, this company Blue Owl, they're not all great companies. This company is one of them that wasn't managed correctly, and they only manage about $300 billion. That sounds like a lot in today's world. It's really not. It's just a small sliver of the total size of the market, which is in the many, many trillions of dollar size in the U.S. and globally. And so they announced that they're stopping all withdrawals. And this, of course, this got everybody's attention. And that investors cannot take their money out, and they're going to restructure the company. And of course, that's what the bears hooked onto. You'll see it all over the news tonight if you watch the financial media. It's one of the reasons the market was down today. But the reality is, if you keep reading, you find out that investors will receive 99.7% of their money back, essentially being made totally whole. It's just going to take some time for that to happen. So again, I would encourage everybody, as Grant said a minute ago, to ignore the fear mongers. All they're going to do is cost you money. That's all they've done for more than 3 years now from the birth of this bull market, and especially with Trump as president, we are going to have the biggest bull market we think that we've ever seen in this country. We think this is the bull market of bull markets, and again, we've got a lot of data to back that up that I hope we can get into a little bit.
Yeah, for sure. What's interesting as I listen to you talk about this, because you told me Blue Owl, so I went on and I'm looking at Yahoo Finance, which a lot of people read Yahoo Finance. I mean,
Sure.
it's widely read. And the headlines are all about the things you said, and it doesn't even mention the 99.7% payback. You would think that that would be right at the top of the list, but the mainstream media, they love the doom and gloom. They love the sensationalism. I know they want a bear market because they don't want to give Trump any credit for anything.
No.
So they'd rather have the American public suffer out there. But it doesn't even say it in Yahoo Finance.
No, the last time I was on your show, we talked about this. And again, what they're calling it is like Muhammad Al-Arian, who's a big guy you'll see on all the networks. I think he's on Bloomberg primarily now. I used to be a big CNBC guy. Today, he said, this could be the next Bear Stearns. And I laughed out loud when I saw that because, again, as you say, the negative news, it sells. And that's why they focus on it. And they don't want to give Trump any credit. But here's one of the things to keep in mind. We have in this country right now, we have more liquidity in the U.S. and globally than we've ever had before. $40 trillion is sitting in home equity. That's never happened before. It's a level never before seen. 70% of Americans have paid, the average home equity is 71%. 40% of Americans don't have a mortgage. So the individual outside of the second America, which is getting hit by high interest rates and the Biden economy, that's going to take time to recover from. But we also have $22 trillion sitting in M2 money supply, $7 trillion sitting in money markets. So people are still scared to death, and they're keeping the money in the banks, the last place they should put it, because cash is trash. It's going to continue to get eaten away by inflation. Again, we've had $8 trillion printed since the Biden presidency. And that's one of the reasons that stocks and assets are going up now. So the smart money is on that side. They're playing assets, right? Stocks. Obviously, homes will continue to do very well. Gold, silver, Bitcoin. And that's where we have our folks positioned. And that's what we think the focus should be.
So this is the thing, and I want to be clear, people don't put their money with you guys at Vertical Research Advisors. You're an advisory group. You handle your own account. I just opened up, I have a Fidelity account. I have a Schwab account that I do a little day trading with. I opened up a second Schwab account, and this is after I was with you yesterday. So we long story short, right. Kip and I were in Dallas, and we had lunch together, and we were looking at some other little projects, but I had lunch with you, and we were talking about just how this sea of liquidity that you're talking about, the bull market going. I am a member of VRA Insider, so I'll tell you what I do, and I'm an open book. I transferred $100,000 from savings accounts at Chase, and I opened up a new Schwab account, and I've dedicated that solely to VRAinsider.com and your 10-bagger system of your portfolio. Now, I already had about 25,000 that I was working with using your system. It had been working so well over the last 2 months that I said, well, I'm going to up it and start this other account and literally dedicate it just to you. Is that how some clients work it?
Yeah, it is. Everybody's different. And as you say, we're not a brokerage firm. We don't take your money. We don't have the conflicts of interest that most advisors do. What we do, we're like a private hedge fund. We tell you what we're doing with our money. We write a daily letter, and then you're free to invest as we do. We never recommend more than 15 positions at a time. Right now, we have 13 positions in the portfolio. As I say, everything from ETFs, our favorite stocks, which are 10 baggers. I've been very fortunate to recommend a number of stocks that have gone up more than 1,000%. One that went up 20,000%, and we've got a couple in the portfolio now that are getting close to 1,000% gains. Made 2,000% in Bitcoin in 7 years. We're up 1,700% in silver, 1,400% in gold, and so we're long-term investors. But everything we do, Grant, as you know, is based on something I've developed over my 40 years in the business, which is we call the VRA investing system. It's made up of 12 screens. It's all proprietary, 12 screens, 70% fundamental, 30% technical. And we use that to tell us what side of the market to be on. Should we be long the market? Should we have more cash? Should we be short? We were short going into the 2008 crisis, by the way. We really did very well. We made like 600% over a 6-month time frame, going short and going long. We'd rather be bulls. It's not as much fun being short. It's I'm an optimist by nature, and I really don't want to be bear, especially in a Trump presidency. But that's what we do. It guides us fully where to be invested, the best sectors, and then my passion over my career is finding growth stocks that can make a difference for your portfolio. And so we get to know the management teams. We fly out to meet with them. and first name basis. They take our calls when we call them. And so, you find a good growth stock that's trading at $3, $4, $5, $10, $20 a share. If you can hold that for 5 years and make 1,000%, you can do yourself some real good. And so that's what both our boys, as you know, are with us. My wife's, it's a family business based out of Texas, and we're proud to 5th and 6th generation Texans. And I've done this 40 years, 15 years on Wall Street. And now what is this, 30 something years doing this close to it privately here with the VRA. And we love what we do. And it's great having folks on board just like you, Grant.
Well, it was great to meet your boys as well. They're fine young men. I can see you did a nice job raising them, and I wouldn't tell you that if I didn't actually believe it. I've seen
my wife gets all that credit.
Well, you should get some credit.
All of
then.
it.
I've seen family business. I was in construction in New York, and there was lots of family businesses in construction. And I saw sons that ruined businesses. I saw sons that just hung on, and they would go to lunch with their dad, and they didn't really do anything. And then I saw sons that transformed their businesses, and I think your sons have that potential. They are really, really fine young men, which tells you a lot about your family. So when we talk about this, right, you mentioned gold and silver. So it's not just the 10 stocks, but you got gold and silver. How does somebody invest in gold if they don't want to go purchase physical gold? Is there a way to work that with your portfolio?
Yeah, absolutely. And we get that question all the time because look, we're big believers in physical gold, but there are other options. There are ETFs that you can invest in that trade just like a stock, but you have to understand that there are a lot of these that are just truly paper ETFs that you should never put your money in because one of these days, these are going to go out of business. It's just a matter of time. These paper ETFs are just basically printed. They don't own gold. They don't own silver. They're not required to. They just print new shares as investors come in. It really shouldn't be allowed, but it is. But these ETFs that we recommend have physical gold. So yes, both for gold and silver, you have better options. We still recommend you have it yourself, and hide it, so put it somewhere safe, because if the worst case happens, you want to have your gold and silver nearby, because that's when we get the kind of move that we expect is going to take place, probably in about a decade, when we start to see real problems in this fiat currency market, which I think is going to happen probably in the next 10 years. And in that case, we could see gold at $50,000, $60,000, $70,000 an ounce. It's $5,000 today.
Amazing. Yeah, $5,000 a day. I've said, I think we've talked about it. I think 10, 15,000, not even in the long-term future, but short-term future. But it's interesting because when you talk about holding physical gold, and I'm a big proponent of that as well, I look at it as hoarding it and not worrying as much about the price as I start to just collect as much of it as I can. Right. And I also kind of have come to the point where I look at Bitcoin that way as well, that I'm not as worried about the price of Bitcoin as I am about just hoarding it. And you're a Bitcoin fan, correct?
Absolutely. Just FYI on gold, in 2003, I recommended, because for my boys were old enough, I was still coaching them in baseball and basketball back then. But this is, gold was $350 an ounce in 2003 when I recommended it. Silver was $5 an ounce in 2003 when I recommended it. And so my second ever newsletter recommended gold, silver, and specific miners. And I think we've done better than anybody. Frankly, I believe we've done better than anybody in the country in this area, because we've never taken off our buy recommendation. And that included a period of about 10 years where all they did was go sideways and down. It was not a fun time, but we just kept buying. We've always believed in using gold as a savings account, silver as a savings account. We don't believe in, and we teach this, don't save in bank account in fiat currency, because the money after inflation, you're not going to make anything. Matter of fact, in most cases, you'll lose money. And so that's been our approach. It's worked very well for us. Just as you said a minute ago, if you'd invested $100,000, taking your cash, the money you had in savings in 2003, and put it in gold instead of a fiat currency, just regular money bank account, that $100,000 today would be worth $1.4 million, right? If you left it just in a bank account, earning money market yields, what have you, CDs, whatever, you'd have less than the $100,000 you invested after inflation. Wow. So it's really important that people understand this. Cash is trash. It doesn't just rhyme. It's actually very real, and great alternatives to it. But again, this is something that most people, we're not taught this. Most people think banks are safe. They're not. It's good for the banks, but it's not good for you.
Yeah. Cash is trash. No longer cash is king, I guess. Cash is trash.
Right. But it's the miners. But that I really was hoping to talk about. Can I
Yeah.
add that
I
in?
wanted to ask you. So when you talk about these are mining stocks, right? Precious metals
Yes.
mining stocks.
Yes.
Tell me.
Gold miners. We like the gold miners more than silver, but there's a lot of money to be made in silver too. We're gold bugs,
Yeah.
We're about 70% gold, 30% silver. That's kind of the allocation we recommend. And we like the gold miners because they have more liquidity. They're more broadly owned, and that's good for trading. And they don't get quite so hard when gold and silver get hit, which they just did, a couple of weeks ago. We think that's over, by the way. But I just put together these facts for you. I think your viewers will appreciate this.
Okay.
This is how young this bull market is. Again, gold's had a big move. Everyone knows that. I think, as you said yesterday, there are a lot of people that are afraid to buy gold here because it has such a big move along with silver. But this is the evidence of how early this bull market is. Less than all around the world, gold, silver, and the miners are owned by less than 1% of Americans have it in their portfolio, and globally. The entire market cap of all gold miners on the entire planet is $1 trillion. Walmart's market cap is 1.1 trillion. So all the miners in the world are worth less than Walmart. That tells you, as a contrarian, how early this bull market is. It's just getting started. Investors have not started coming into this group yet. CapEx, capital expenditures right now are at all-time lows, never been seen before. We've had this massive move higher in gold and silver, but yet even these mining executives have not started to really develop their assets or acquire. We've not seen an M&A boom or anything like that. Check this out. Gold miners are trading right now at 0.7 to NAV. It's another way of saying book value. They're trading at less than their net asset value, which again, these are statistics that have never been seen before. So gold and silver have had a big move, but the miners have not. That's the key point. Gold, bottom line, the miners are trading right now as if gold is still $2,000 an ounce, not $5,000 an ounce. So we've been pounding the table on this group. As you can probably tell, I'm passionate about this. We think everyone should own these, especially the junior gold miners. We have a couple we recommend here. With your permission, I'll give one away. Is that okay?
Yeah, do it.
All right. Snowline Gold, okay? We've been up to tour the property. This is in the Yukon, so it's Canada. It's a very safe mining jurisdiction. The stock's had a big move. It is up 4,000% in the last 4 years, so we've done well there, but it's just getting started. We think this is the most important discovery in North America in the gold miners, probably in 2 to 3 decades. And investors are just now finding out about it. It's got a great management team, father-son management team. They've already proven up 8 million ounces of gold. Again, this is a new company, but they've got 1 million acres of land. They've only drilled on less than 5% of that 1 million acres. So this could be an absolutely massive gold discovery. They have no debt. Again, a quality management team.
And I
Snowline Gold is
capitalized enough in order to keep mining.
Great question. They have about $130 million in cash right now. They've been very smart about raising money as the share price goes up without taking on any debt at all. And they own it 100%. There are no partners in this play. So we think this stock, again, even from here, again, it's had a big run. It's about $13, $14 a share now. Actually, it might have just dipped below 12, but it doesn't matter to me. We buy every dip in this stock. We think this could be an $80 to $100 stock in the next 5 years.
Wow. All right. So Snowline Gold. So that's a nice tip from Kip. And here's the thing. If you go to VRAinsider.com right now, you sign up for the newsletter, you get a 2-week trial. Every morning you have your portfolio in there. People are going to get this literally for free, aren't they?
They do, and they get everything. We decided to do this. So, if we're gonna do it, let's do it right. Let's give for free. Let's give all of our visitors really access to everything: our daily newsletter, all our special reports. We in our members back office. We list every trade that we've done for now 11 years. We're aware of no one else that lists every trade that they've done for 11 years because some people would like to forget a year or two. Well, we put it all out there. We have beaten the market 19 out of 22 years. Last year, we were up 35.7%. We've averaged 31% returns in the last 3 years. Overall, we've averaged about 28% a year over the 22 years. We're pretty proud of that track record. And again, we think this is going to be one of those bull markets that you have to be in. We think that even though the market's been a little sideways over the last 4 or 5 weeks, as we get ready for the one big beautiful bill to finally kick in, and that's the topic we're also very passionate about with the Trump economic miracle. We think this is going to be a very good year for stocks. We probably think about 30% gains again this year.
All right, let me ask you one last question before I let you go, just out of curiosity. When you mine silver, do you do it the same way you mine gold? And does it take the same amount of effort to mine the silver as it does to mine the gold? And the reason why I ask this is, if you're going to put the effort in, why not just go for the expensive stuff? Why go for the cheap stuff?
And in some mines, you have both, right? But they tend to be separate, really. You have silver mines or gold mines. The mining process is about the same. It's gotten much more environmentally friendly, I will say, which means it's gotten a little more expensive. But it really is remarkable. Again, gold's at $5,000. Most companies are mining right now between $1,200 to $1,500 an ounce. That's their cost. And so they're making fortunes. They're printing money, but the stock prices just haven't seen it yet.
Does it run the risk of people not mining for silver, even though it's up, but if you could mine for gold instead, wouldn't you rather just go for the gold?
There are people, that's how I feel about it. That's why I'm a gold bug. But there are a lot of people that are more passionate about silver. It is a great story. There's a huge shortage of silver. That story's been known for a while. And because silver is an industrial metal, right? Gold is primarily just a precious metal. Silver goes in pretty much everything with these data centers, with the AI boom, and what we're going to have with robotics. And it just, again, this is a technological revolution like we've never seen before. Silver should do quite well.
One more for you. Uranium. We stopped mining uranium in the United States. I was talking to your friend about this yesterday, who's in oil and gas. I said we stopped mining for uranium. The U.S. was the number one producer of uranium. Now we've basically handed it over to China. There are some old uranium mines that are trying to be back up and running. Are you looking at all at any of that?
It doesn't really exist in the U.S. anymore, as you say. After 3 Mile Island, nuclear became, passe. Everybody said, no, we're not going to do that anymore. We're really not. I think we like nuclear stocks. We have a nuclear company. We're a small modular nuclear reactor company called New Scale Capital. We think that's going to be a really big company, and it's been very volatile. We think it's a great buy here, but not really uranium itself. That's not a pure play for us.
It's great to talk to you about this stuff. I'm always so fascinated by it. I enjoy our conversations, and I urge people to visit you at VRAinsider.com. I will tell people how to find you. Kip Herriage, as always, great seeing you. Thank you for coming on today.
Thank you again, Grant.
Absolutely. My pleasure. All right, folks. So listen, here's the website. And you heard Kip. They're giving it away. So you get a 2-week trial. You get access to everything. VRAinsider.com. That's VRAinsider.com. I put Crush the Market underneath there because that's exactly what they do, and all you got to do is follow the system, and it's so simple. So go pay them a visit, and you're not going to regret it. Do what I did and get with them. VRAinsider.com. That's VRAinsider.com. I'm Grant Stinchfield. Stinchfield's Army Rolls. We'll see you tonight on the Real America's Voice Show, 7 p.m. Eastern Time. Thanks for watching, everybody.